Hello and welcome to Kitco Mining with me, Paul Harris. Today we are talking about turning around a US precious metals miner. And joining me to discuss this is Paul Huet, CEO of America's Gold and Silver, which owns the Galena Mine in Idaho. Paul, welcome to Kitco.
Thanks very much, Paul. It's a real privilege to be here. Happy to be here today.
We have a lot to talk about. I'm really excited about this. You've been CEO for almost a year now. You were appointed in November 2024. Let's start there to kick off our conversation. What was the rationale for your appointment? What was the task you were appointed to achieve?
Yeah, Paul, thanks. Look, it has been a very, very busy 10, 11 months, as you pointed out. Originally, the task was to turn the company around. The company was in a very different situation. Unfortunately, we were almost insolvent. And myself and the team had just finished selling the Karora assets to Westgold in Australia. We were tapped on the shoulder by the largest shareholder of the Galena Mine, which was Eric Sprott, who owned 40% of the Galena Mine. And a year before that, Paul, it was interesting that Eric had asked me to become a technical advisor at the Galena Mine, which he owned 40% of. So as I was looking at the Galena Mine, I found some very similarities between the previous companies that we had built as a team. So Klondex itself and Karora for the last 6 years. So from my perspective, everything I was looking at as Eric's technical advisor in the beginning was repeating something we had done, a complete turnaround right here in our backyard in the US. So I was very excited about it, and I presented it to my team and then over to Eric, Paul. The first thing I said to Eric was, look, if we want to change this company and change the momentum, it's on the way to a very difficult position here. It's heading to bankruptcy. If we want to turn that around, we got to fix the mine. In order to do that, we need to change the board, change the executive team, change the corporate structure and the shareholders. And that's what we did. So step one, we got Eric to come in and vend in his 40%, Paul. So he is now the largest shareholder, owning 20% of the company, but he no longer owns 40% of the asset, which was very important. It was important that our shareholders owned 100% of the Galena Mine and our Cosalá mine in Mexico. So today, as owners of both of them, we have an opportunity to grow both of these assets. And the thing that was very interesting in the beginning, Paul, it was very easy to see that these assets were starved with capital. So if you look at the former board, the executive team, they were very focused at building a mine, a gold mine in Nevada. It's called the Relief Canyon Mine. Unfortunately, that broke the pick, and that's what caused the disaster in the company, but also created the opportunity for us and the new team to come along and invest alongside the shareholders. And I would say that I would be remiss by not saying that me and all the members of my team are very aligned with our shareholders. This is the single largest position I've ever written in my entire career. And I've been mining for a little over 37 years. So for Eric to vend in his 40%, he said, Mr. Huet, I'll do it, but you must put X amount of dollars. And it's the largest single investment of my 37 years of mining. I'm very happy I've done it. I have a wife and 7 kids. I wasn't about to risk it all, but I put 70% of our net worth into this. And I'm very happy we did, because so far it's been very good. And there's a lot of room from here, Paul. A lot more excitement to grow from here.
How much did you put into the company, Paul, and what percentage of the company do you own?
Yeah, so right now I'm about the 5th largest shareholder, I believe. If you go on SEDI, you'll see that I own, it's north of 12, 13 million shares with what I got. I got some for compensation, but I wrote checks, and I'm going to leave that to myself and my wife. They were very large checks, but it's by far the single largest position, which puts me, as I said, 5th largest shareholder of this company. But I'm not alone here. When we sold Karora, my executive team, they all wrote large checks as well. So we didn't get a bunch of free stock. A lot of people think, well, we got free shares. That's not what happened at all. In fact, even during the financing, we were writing checks for $1 million, $1.5 million to soak up some of the shares that were being liquidated. So we are very aligned with shareholders, but this is what we do best, Paul. When you think about, people said to me, you're 57 years old, you got 7 kids, you got a wife, why would you put 70% of your net worth? And I said, this is the safest place I've ever put my money in my life. I've been doing this for, again, 37 years. I have never put a large amount this size, but it's the safest place it's ever been. And when you look at what do I believe in silver? Well, look, silver is already $52 an ounce. $52 an ounce, Paul. Where is it going? It's still got room. At $35 an ounce, we make a lot of money. So we're very happy when it continues to rise at these prices. And we're turning the Galena mine around. We're doing something here, Paul, that hasn't been done in 2 decades. This mine has been around for 20 years, Paul. All it needed was a bit of love and attention and somebody very focused, an operator focused at the mine. For those 2 decades that it was run there was no exploration at all, zero exploration dollars. You can't have a narrow vein underground mine and try to keep it running year after year after year and sustaining and making money, by the way, if you're not doing any exploration. If you're not sinking and reinvesting in that company, you're going to end up where we were. And that's what happened. So if you look back at the last 15 years, Paul, our production at the mine was around 1.5 to 1.2 to 1.5 million ounces per year. That's running it at half speed. The mill was running 2 days a week. Our people are working 7 days a week. So you got a mill that's running 7 days a week, but it's only operating 2 days a week. It was a real shame. That's not the way it's going to be. What we're going to do, Paul, with a high level of confidence, is restore Galena back to its good old days where it was doing 5 million ounces a year. That's 4 times the current production. And we're well on our way to doing that. Next year will be our first year of guidance. And I think I know people are going to be extremely happy with what we've done. So if I just recap from my apologies.
Let's get into those bits one at a time. Let's talk about some of that love and attention that's been starved at Galena. What are some of the things that you saw that needed to be done to bring the mine back on track, to get that mill filled and operating 7 days a week or 6 days a week? What are some of the things that you saw that had to be done there?
Thanks, Paul. Look, these are not, they're basic mining steps that were omitted. First and foremost, bring in a real operating team. Even when I was Eric Sprott's advisor for that year, before we bought the mine, Paul, that mine went through 3 general managers. You imagine running any mine anywhere in the world and going through 3 different GMs in 1 year, 12 months, 3 GMs. You can't do that. So after changing the board and the executive team, we brought in a very high profile, good operating team and ourselves. I'm at the mine every week and I've already said how much I've been mining. That's what I'm known for. My biggest strength as a CEO for every other company I've turned around has been my ability to operate a mine. I'm there every week as a CEO, week after week after week, underground in the mine with our team. So bringing in a team, Paul, step 1. Step 2, our mining method. We needed to change the mining method, Paul. The mining method that's been done here for the last, it's actually 50 years. And I don't know if you'll see this, but you see a picture of a miner here with a jackleg here, right on this side here, Paul. That's a handheld drill. 100% of everything we were doing, Paul, was with a handheld drill. Our neighbors next door are mining 100% of their deposit with long hole. So you got 2 mines within a 10-mile proximity, completely different mining methods. And their mining method is much cheaper, safer, less labor intensive, and it's way more productive. So all we had to do is say, look, what are we going to do at Galena? We're going to do what our neighbors are doing. And in order to restore it back to those 5 million ounces a year it did back in 2002, so 23 years ago, it actually did this, we needed to change the mining method. And in last month, we took out the first ever long hole stope in 2 decades out of the Galena mine. And we carved it out surgically. If you ever came on an underground tour, Paul, and I'd welcome you anytime, you would love to come and see this mine. It's a very exciting mine, a lot of opportunity. You see the stope that we carved out. It's about 3 feet or 1.1 meters wide. We could not have done any better if we did it with jacklegs. That's how narrow we mined this sliver of rock. So changing the team, changing the mining method to long hole, improving the number 1 bottleneck, Paul. Our number 1 bottleneck was our shaft. And our shaft is, if people don't understand it, it's the elevator. What makes the men go up and down? But more importantly, it's what makes the rocks go up and down. So our shaft was constrained to approximately 650 to 670 tons per day, Paul. So if you're moving rock, that means ore and waste every day, 650 to 670 tons per day. That's not a lot of rock movement. We have completed phase 1 of debottlenecking the shaft, and that comprised of improving the motors on the very top of that shaft. We went from 1,750 horsepower to 2,250 horsepower. That's already allowed us to double our productivity rate. So what it means is we were able to skip up and down the shaft 40 tons per hour. We now today have the ability to skip 80 tons per hour. Every hour we're skipping 80 tons. Our final goal is to get to 118 tons per hour. What does that mean on a daily rate? It means we're taking an operation that has been constrained, bottlenecked to around 650 tons a day for the last 20 years to over 1,800 tons a day. We are tripling the capacity in that shaft, allowing us to move anywhere from 800 to 1,000 tons of ore a day. We've been constrained to 300 tons of ore for the last 15 years. Those are game changers. So the last step is a backfill plant. Those 4 steps, team, mining method, shaft, and batch plant, Paul, with the new equipment, that's what we needed to do.
Okay, so it sounds like the plan is being really effective in its execution. So the question there is, how close are you to completing the execution of that plan?
Paul, that's a really good question. So we are the team's in place. The mining method has started. We've got about half of the new equipment. We've bought a brand new fleet of equipment. We have to take it apart and reassemble it back underground. So about half of it's in place. Shaft, step 1 of 2 phases is complete. And the only thing we haven't completed this year is the backfill, the new batch plant. So by the end of the second quarter of 2026, everything will be done. But we're going to phase the production up. So next year, as we put out guidance, you won't be surprised that it'll be significantly better than what has been done over the last 15 years. And we're very proud of that next year guidance that we're putting together for our board. And it's on the heels of doing those things that we talked about, changing the mining method, the shaft, the new team, and the backfill, and the equipment. So on the heels of doing that, we're going to put out guidance next year, which will see a significant growth over any other previous year. And coupled with that, we're doing a lot of exploration drilling. Because the site has been starved for exploration, there's been no exploration in a decade there. We started drills turning, and I just wanted to go to a couple of slides. We had 2 slides with some drill results. We hit 3.6 meters of 980 gram. Why does that matter? Well, first and foremost, we have a very large resource at this operation. So north of 100 million ounces. Even when we get to 5 million ounces per year, you can do the math. You're like, well, he's got 20 years. We've got about 150 million ounces. So for us, it's not about increasing the amount of ounces, whereas in gold, we're always trying to get more ounces and more ounces, Paul. In this case, it's about displacing some of those ounces for better grade. So what we're always targeting is, let's find the areas that have the best grade and bring those into our mill, because we do have 2 mills as it stands, and we want to make sure we use both of those mills so that we can, once we get to 5 million ounces per year, we don't stop there. We keep pushing ourselves like we have done at every other operation.
That's what brings me to the sort of next question. You said you're going to be releasing your initial guidance next year. I don't want to sort of front run that number, but from what you're saying, it sounds like you're going to be potentially doubling your production, so potentially doubling that 1.5 million ounces.
Yeah, so it's going to be a number that people are going to be very happy with. Again, you're right. I don't want to front run it either. I want to say that on average, 1.2 to 1.4 million ounces, a significantly better number once all that capital is spent. And we're completed with that batch plant in second half of next year. And these systems have been in place for more than 30, 40 years here. So it's not just 2 decades. So some of the systems, like the shaft itself, has been there for 5 decades. So some of the stuff we're replacing and improving have been there for a very long time. And some of it we've got even changed with the morale with some of the people, because they're so used to doing things the same way. And we're implementing a new mining method and adopting new programs here. We're actually creating a lot more work, because the expansion, the goal is to go from that 1.2 million ounces to 5 million ounces per year, but never to stop there. We won't be satisfied at 5 million ounces per year. Every other company us and my team have worked with, we've been able to beat every record that's ever been done. And this won't be the exception. Here's some of those grades I was talking about here. 983 gram. That's double double our head grade that we have right now. And we're already in the top 5 highest grades on the planet. We're a very, very high grade at over 450 gram. We've got some stuff that's double that and even higher than that. So we're quite excited about some of the grades that we're hitting with the drill bit, Paul.
Well, one of the interesting things there, Paul, I'm glad you're sort of talking about exploration, because my understanding is that in prior years, when the silver price was low, the operators focused on perhaps base metals production to conserve or preserve the silver for a future when the prices were higher. To what extent are you now able to turn on the silver tap now the silver price is over sort of $52 per ounce?
You know what? That's a very, very good distinction. Not a lot of people know that when silver prices were sub $15 an ounce, that the company was very focused at mining lead ore. And why is that? Well, first and foremost, preserving some of that optionality with silver, but more importantly, it was because lead could pay the bills. So with the higher prices of lead, produce more lead, less silver, preserve the silver for a better pricing. And you are correct that that's exactly the moment in time we're here. We're here at $50 an ounce silver, and we've got more than 60 miles of existing tunnels with 4 shafts, not one, and I'm only using one today, 4 shafts, 2 mills. So we have the perfect recipe here with all the infrastructure we have in place. We've got the team, we've got the dollars, we've got the infrastructure, we've got the permits. Now it's about mining it. So getting to that 5 million ounces. But more importantly, as you were talking about, what else does it bring? We get copper, gold, lead, and antimony. And I know we're going to talk about antimony, but all of those metals, all five of them are on the US's critical mineral list. The silver, copper, gold, lead, and antimony. All 5 of the elements that we're presently mining today are on the US critical mineral list.
Now, you've kind of stolen my thunder, Paul, because I was going to come on to the antimony and copper, and I was going to say, and there's more, which obviously there is. You mentioned the copper and the antimony. In the past, the company has not been paid for those, despite the fact that they were in the concentrates. That is set to change next year because you've negotiated a new agreement with the Trail Smelter in British Columbia. That kicks in, I believe, in January or the start of January 2026. What is in the new agreement, and how does the company benefit from that?
Yeah, Paul, you're 100% correct. And how our company and our shareholders get to benefit. In the past, the copper credits, the antimony credits, and the gold credits were not being paid for. Those are 3 big elements. We were getting paid for silver and lead, and that's it. Meanwhile, we're producing 5 others. We have 7-gram gold in our concentrate. You think about any gold. I've been a gold operator my whole life, 7-gram gold in a concentrate, and I'm not being paid for the gold. I'm like, oh my God, that's a huge opportunity. Anybody who's a gold guy listening to this video will go, my Lord, how did that happen? And all we say is, look, that was the past. And as you pointed out, Paul,
what I've just written down here. How did that happen?
Yeah. So you're right. Now the future is going forward. We are going to get paid. We did get to meet with the group at Trail and meet with the group. Our demands are very different now. Before, the company was needing cash flow so fast that as soon as a truck of ore of concentrate got into Canada, we got paid 80% of it, and we were willing to accept some of the losses we had because to get paid quicker. So in order to get paid really, really fast, we said, we're willing to give something up for you to give up the money right away. And now we're saying we're not willing to give anything up because our balance sheet is extremely healthy. We've raised over $160 million. We're in a very strong commanding position. Therefore, pay us for all our metals. So effective January 1st, we start to get paid for antimony. It was a penalty for 20 years, Paul. Now, why is that important? Well, antimony is one of the most important minerals that we're seeing on the critical mineral list because China cut us off in November of 2024. And Galena and Sunshine and all the mines around us in the past, in the 40s, were huge producers of antimony for the Department of War. This is an important, critical thing. It can't go without saying that if you watch one thing on this call today, one thing that's so important that I really want people to remember. At the moment, currently today, America's Gold and Silver is the only mine producing raw antimony in the US. There are no others yet. They're coming. They've got a lot of work to do. And at some point in time, together we might meet the US's demands. We're short of it, but there's only one mine today that is producing antimony, raw antimony, and it's us. The tetrahedrite that we mine and mill and prepare into a concentrate, gets shipped up to Trail into BC. We get paid for that antimony. So going forward, there's tremendous opportunities. We've just put out a press release working with a group of experts that can work alongside us and guide us to working with the government to collaborate to solve a major issue in the US with this antimony. We've got to get some of this antimony back to the US government. So for us, it couldn't be a more exciting time. We've got silver exploding. Finally, you're getting paid for gold, finally getting paid for copper. And then you have this antimony that's a tremendous blessing. It comes at no cost, Paul. We're mining all this stuff anyhow. It comes at zero cost for us.
How easy was it to negotiate the contract terms with the smelter? Because smelters are very, let's say, reticent to give up any value that they don't have to. And given that they'd treated these elements as a penalty element for many, many years, how easy was it for them to sort of turn around and put a new agreement in place?
Yeah, look, Paul, I'm not going to lie. That wasn't easy. You're not right. And these guys they were much larger in scale than us. But when I first got here, we were a sub $100 million company. Today, we're a $1.4 billion company. So, and the fact that we're increasing production means a lot to the refiner in Trail. It matters now. We're not as insignificant anymore. So it wasn't easy. There's no doubt about it. But the thing that we had as leverage for us is we didn't need the cash right away. And the fact that we are increasing production by 400% was very, very important to that negotiation. Had we not increased anything in production and our plan was to stay status quo, I don't think we would have got better terms. We needed some kind of leverage, and that leverage came with the additional production that feeds their plant. So having that for themselves, it was a win for them as well. They have this stuff just being trucked across the border here. We're talking Washington right into BC here. It's an easy haul for them as well. So it wasn't simple. It took a bit of time to get negotiated, but in the end, both companies came through for each other's shareholders, and we're in a much better position we've ever been in 2 decades, ever. It was a penalty before. Now I'm getting paid for it. So you can't help but be excited.
Congratulations there. And I imagine that negotiation will potentially set you up for future negotiations that may come, because as you mentioned, you announced this morning that you've retained a Washington lobbyist to approach the US government. What is your aim there? What is your preferred outcome from the engagement with the US government?
Yeah, look, there's no doubt if you start looking at everybody around us, you name any company around us, and they're all doing extremely well, working in collaboration with the government. The difference is everybody around us are looking for a permit, they're looking for funding or something. In our case, we would love to work with the government in collaboration to solve the US antimony problem. How does it affect our shareholders? On pricing of antimony, getting the right pricing. Even though we are getting paid for our antimony, there's still a lot of room. We're not getting the 99.7% recoveries that we know we can achieve. We're still leaving quite a bit of money on the table. And if we work with the government, we can collect and capture that extra money. Capturing that money for our shareholders is important, but more importantly, it's a direct combination with the government because we need this antimony so desperately in the US. We'll be producing 2.5 to 3 million pounds of antimony on an annual basis. That's by far the largest producer. There's nobody yet today. There are a couple groups doing some different things, and they're going to be producing in the future, but they're not here yet. And in the meantime, we need some production now. So for us, getting good pricing and getting the full value of our antimony instead of a fraction of it. So it could mean, it does mean a lot more dollars for us in revenue and for our shareholders. And anything you do alongside the government can be very good from any source. So we're quite excited to work with the lobbyists and get in front of the government. People have said to us, why are you so late to the table, Paul? Like, we see all these grants coming around and press releases and LOIs, and people are so far ahead of you. And I said, well, look, we've been here 10, 11 months. We had to change the board, change the executive team, raise $160 million, change the entire mining method, bring in a new fleet of equipment. So we've been so laser-like focused at getting the Galena Mine fixed and running our Mexican asset at the same time and deploying capital to Mexico and exploration and equipment and exploration and equipment at Galena, that we haven't had time to start looking at other opportunities. But today, our mines are on a very good trajectory. We've got management teams at both of them that we trust. We can let them give them the autonomy they need, while the corporate office is now focused at how do we get more revenue for every ton we mine and take advantage of that. And this antimony, look, I'm seeing some of the numbers from others, and they're just astronomical.
Well,
The advantages we're actually losing.
I imagine your eyes are perhaps getting nice and wide because, I think you mentioned the anxiety of the US government to have antimony. I think it was the last week or two, the Department of War agreed to provide more than $40 million of funding to a gold project in Alaska that's basically just got a rock sample with antimony in it. Hasn't done any drilling yet. That's quite an amazing thing. So I imagine you're going to have a great reception in Washington. Let's come back to sort of money and finances again, Paul. You mentioned you've got a strong balance sheet. Let's say, the silver price has doubled in the last year or so. Sounds like you're going to more than double silver production. And on top of that, next year you can get paid for copper, you can get paid for antimony. Next year, your financial results should be quite spectacular.
Yeah, they're going to be very different than they ever have been. Again, look, we've raised a combination of $160 million. It was $50 million on day one, right out of the gate. That was equity. Then we raised $100 million in debt. And the reason we raised that debt is because we know we're fixing the operation. And if you look at my history with the previous other two companies as CEO of Klondike, CEO of Karora, we did the same thing. We raised some debt and we repaid the debt. So the debt puts us in a strong position. We've only drawn down 50 million of the 100 million. And when we raised that 100 million in debt, Paul, we had another group, Ocean Partners and Tech Cominco together, put in another $16 million or $11 million, $11 million at a 16% premium. So alongside of the debt, the 100 million, we got another $11 million US at a 16% premium. So with that 50 million we've drawn down, we have 50 million in reserve. We're in a commanding position now to get our mines the right capital they need so that we can get to that 5 million ounces a year in Idaho and get to over 2.5 to 3 million ounces in Mexico and start drilling and understanding these deposits a lot better. So, and Galena will grow from the 5 million as well.
Okay. Aside from being paid more for your sort of byproducts, what are the other plans and catalysts for you for 2026?
Yeah, so for us, 2026 is going to be a year of putting out guidance and make sure we deliver. One thing we've had a reputation on, Paul, and it's hard to get in our industry. I've been doing this for 37 years. It's hard to have a reputation of these guys, they put out guidance or they tell you they're going to do something and they deliver it. And I'm going to just tap us a bit on the shoulder here, the team and I. In 20 quarters at Karora, for 6 years, 20 quarters, we delivered 19 out of 20 quarters. We missed one of those 20 quarters. It was a COVID-related issue, but we were still about 95%. But making sure we put out guidance and we deliver on those promises with production and costs and everything is very important to our shareholders. Then our shareholders, they buy the stock and they believe us. They go, look, these guys are going to deliver. They're going to do what they said they're going to do. And in every case, our reputation management is so critical for us and our shareholders. We have managed to change our shareholder base from, we had about 92% retail, 8% institution. Today, our shareholder base is about 65% institution and 35% retail, which is a really, really solid base for a shareholder base. So we've got a lot of institutions and plenty of retail there alongside us as we continue to get added to ETFs, and we're growing in size. Our liquidity on a day-to-day basis, I think we're a $1.4 to $1.5 billion company, trading $6 million a day here now, coming from where we used to be a sub $60 million company. So a very, very different company than where we were when we started this journey, Paul. And it's a very exciting journey. We're far from done.
Excellent. As we look into the future, let's bring in the asset you mentioned right at the top that almost bankrupt the company, and that's, of course, Relief Canyon in Nevada. What's the status there? At what point do you think you'll be in a position to sort of turn some attention and bring some love to that again?
Yeah, look, so Relief Canyon's about preserving optionality. Paul, we were seeing gold at $4,000 an ounce. Who knew, right? I think some people predicted it for sure. But at $4,000 an ounce, you could be mining maybe 10,000 ounces a year and doing quite well. That mine is fully built, fully permitted. So we're in no rush to go and sell it at this point. I can tell you we have a lot of offers until we do the work, and we haven't done the work. We have some metallurgical work and some testing to be done, and we're talking less than $100,000. The care and maintenance costs are fractional. They're insignificant. So for us, selling it, we feel like it might be premature. So we owe to ourselves and our shareholders to at least do the test work and then make a decision on what we want to do long term. So at the moment, we're preserving the optionality for our shareholders.
Okay, let's look a little bit further ahead. What's your vision for the company? Where do you want it to be in, say, 3 years' time, 5 years' time?
Yeah, look, when I first came here and I looked at the Galena, even when I was here for Eric, I always said that this thing was so undercapitalized and that the district itself needed to be consolidated. And again, I'll repeat Klondike. Klondike, we started with a single asset, one mine in Nevada. We ended up with 4 mines and 1 mill all around a single consolidated area. There's tremendous opportunity here, Paul, to consolidate someplace. There's tremendous synergies, even within our own complex. We have, again, 4 shafts. We're using 1. Should we start the core mine up? Should we start the Galena mine up? Those are big game changers for us. Then you start looking at, well, they're going to be producing 10 million ounces a year. And then that adds on to the copper, the gold, the silver, the copper, the gold, the antimony, and the lead. Everything else goes up as well. As silver increases, every other component goes up. So for us, making sure we take advantage of our district, because we never have been done that. That's not been done here yet. It's never been tested because there hasn't been any drilling. So looking at what we already own, which is a tremendous amount of land, and looking at the synergies that exist amongst ourselves and getting to 10 million ounces per year, that's certainly on our radar. Without doubt, we're very focused at doing something that hasn't been done here by getting all of them working together.
Well, it's been a fascinating conversation, Paul. Congratulations of what you've achieved so far in your first, 11 months in the job, and good luck with what's to come. Paul Huet, many thanks for joining us today.
Paul, it's a real pleasure, and I love to be on Kitco. So thanks very much for having me, and look forward to seeing you again.
Excellent. And of course, to our viewers, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.